Hello and welcome to another session of the My Solo 401k Financial Daily My Community webinar. If you have questions or topics you'd like to discuss, please chat those over now so that we can be sure to get to them all. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So this is our daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, Sole Props Alert, how to save thousands by acting before December 31st. This is your chance to get answers. So please use the chat now to ask questions, whether it's on today's topic or anything else. Again, please chat them over now so that we can be sure to get to them all. Please don't wait. Let's get started. So let's start out with the basics. Who's eligible to set up a solo 401k? Well, you need to be self-employed with no full-time W-2 employees. So all 401k plans are for employers. Solo 401k plans are for self-employed individuals, specifically owner-only businesses with no full-time W-2 employees. Now, there are two elements to the eligibility. One is self-employment, which can be demonstrated by either reporting earned self-employment income on Schedule C. For example, if your business is taxed as a sole proprietorship or a single member LLC, or W-2 wages, if your business is taxed as an S Corp or a C Corp, or income reported on line 14 of a K-1 that you receive in the case of a business taxed as a partnership that files a Form 1065. The other prong of the eligibility, besides self-employment, is not having any full-time W-2 employees other than the owner or the spouse. So stated differently, you cannot have any non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So your spouse can participate. For example, if your spouse is working in the business, or another at least 3% owner of the company can participate if they're also reporting their own earned self-employment income. And you can still maintain it as a solo 401k. Ultimately, this can be ideal for all types of self-employed individuals. It could be a freelancer or a realtor or an attorney or a consultant or really any other type of small business owner that's reporting that earned self-employment income with no full-time W-2 employees. Now, in terms of some of the eligibility checklist considerations, do I need a separate entity? No. We have many customers who operate as sole props, who operate as sole proprietors, and that's fine. Ultimately, the key is that you're reporting that earned self-employment income, which for a business that's taxed as a sole proprietorship, like say a 1099 independent contractor, that would be income reported on Schedule C of the 1040. Now, there's no minimum amount of earned self-employment income that you would need in order to be eligible. But of course, your ability to contribute to the plan is based off of your earned self-employment income. So if your earned self-employment income is relatively small, then you're not going to be able to contribute relatively much to the plan, even though, of course, you could still take advantage of it, make those contributions that you can make, and or take a loan and or invest in alternative investments. There's a litany of features that our clients are setting up our plan for. So your spouse or business partner can participate as long as they're reporting their own earned self-employment income. So maybe each spouses are reporting their own separate Schedule C, or each spouse receives their own W-2 in the case of a business taxed as an S Corp or a C Corp. You could have a solo 401k plan based on that self-employment activity and still have a W-2 day job and even still participate in your W-2 employer sponsored plan. Again, as long as you got that separate self-employment activity with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So that's what gets you in the game. Now, the deadline is December 31st, 2025, if you want to preserve the ability to make 2025 solo 401k contributions by your business tax return deadline, including any timely filed extension in 2026. So if you sign up by the end of the year, you'll preserve the most options in terms of contributions. In other words, you can make all types of solo 401k contributions for 2025, whether employee, employer, or voluntary after tax, and have the most time during which to make those contributions. Because now you can make those contributions all the way up until your extended tax return deadline next year if you file a timely extension, which in the case of a sole prop is your 1040 deadline. So we're looking at October 15th of 2026, as long as you sign up by the end of 2025. So this is good. This is a good chart as it lays out the specific setup deadlines and then the corresponding contribution deadline. So with our first row here, and this is geared specifically for a business that is taxed as a sole proprietorship, could be a single member LLC taxed as a sole proprietorship, where that income is reported on Schedule C of your 1040. So if you set up the plan by the end of the year, by December 31st, 2025, you'll preserve the ability to make all types of contributions, pre-tax and or Roth employee, pre-tax and or Roth employer, as well as the voluntary after tax, which is how you make mega backdoor Roth contributions, by your tax return deadline, including any timely filed extension next year. So that'd be April 15th of 2026 or October 15th of 2026 if you file a timely extension. If you wait, then your options will not be maximized. So if you don't set up the plan by the end of the year, but you set it up in 2026, thanks to the Secure Act, if your business is taxed as a sole proprietorship, you still could make all types of contributions, employee, employer, and voluntary after tax, but you'd have to make those employee contributions by April 15th. If you set it up in 2026 and you want to make those contributions by the extended tax return deadline, all you could do at that point after April 15th of 2026 would be to make either employer or voluntary after tax contributions by October 15th of 2026. So if you want to preserve the ability to make all types of contributions by October 15th of 2026, then you would need to set up the plan by the end of the year, by December 31st, 2025. Now, we make it easy to meet the deadline because really what it means to meet the deadline is to establish the plan. And what is a solo 401k plan? A solo 401k plan is a legal entity. So how do you establish a legal entity? It's the documents. It's not the accounts. It's not the EIN number. It's not making contributions. What establishes the plan is the documents. So we create the documents within the same business day when you sign up. And it's just a matter of submitting our quick 1-minute application. That's how we capture the information we need to draft the documents specifically for your self-employed business. Once we receive the application and payment is made, we draft the solo 401k plan documents specifically for your business within the same business day. An email goes out with a link to our secure portal where you can download those documents that were drafted specifically for your business. The cover email specifies where to sign the documents, and you've met the deadline. You don't need to return back the signature pages to us. You don't need to open up the accounts. You don't need to make the contributions. You can take your time to do that anytime next year in 2026, as long as you meet the deadline, meaning as long as you sign up. Now, completing the application and payment establishes the plan. So if you take those steps by the end of the year, that's going to result in the following. It's going to give you the options to be able to make all types of contributions for 2025, whether employee, employer, voluntary after tax, by your business tax return deadline, including any timely filed extension in 2026. You can open up the accounts, You can figure out how much you're going to contribute. You can make those contributions. So let's break down those initial steps, because those are the key steps that need to be met by the end of the year. So the online application, you can find it quickly and easily at my solo401k.net. Click on open account, then click on solo 401k. It's just 10 simple questions, basic information for most people, because it's your name, your email, your phone, your address, how your self-employed business is taxed. So if you don't have an entity, you would just choose sole proprietorship, how you want to name the plan, which we want you to use 2 words in the word trust. Once you submit that information and make payment, we will prepare the documents within the same business day. We use our IRS approved documents to create a plan specifically for your self-employed business. That's what creates the plan. So those documents are going to include an adoption agreement, a plan document, a trust agreement, a copy of the IRS favorable determination letter. So that's a letter from the IRS where they're confirming that they've determined that these documents create a qualified plan. And that's important, because if you want to be able to make contributions to a 401k, it needs to go into a qualified plan. Now, an EIN number will need to be obtained for the solo 401k, and we obtain it as part of our onboarding process, but that's part of the account opening process. So that can happen next year in 2026. Obtaining the EIN number is not a prerequisite to establish the plan. It's really the documents. And then step 3, we're going to, again, send you an email to our secure document portal where you can download the documents that were specifically drafted for your business. You can just download, sign. You can use electronic signature software if you have that to meet the deadline and to sign those documents. And you can take your time to return the signature pages when you're ready to open up the accounts, which again could be in 2026. So now you've met the deadline by signing up. Now you can take your time. So when you're ready to open up the accounts, which can be in 2025, but you can wait until 2026, then we want you to send us back the completed and signed pages, which again, those could be signed electronically. There's going to be a secure upload link in that email where you can send it back to us. There's also going to be a link to our next steps questionnaire where you can tell us where you want to open up the accounts at. So we're totally neutral as far as where the accounts are opened up at. We don't hold or have access to our customers' funds, but we're very hands-on in helping customers open up accounts at the bank or brokerage of choice. So for example, top options are Fidelity, Schwab, in terms of brokerages, bank. If we are working with an advisor, it could be Altruist, LPL, among others. So Fidelity Institutional, Schwab Institutional. So for example, if you go with Schwab, we prepare the paperwork that Schwab requires to open up free brokerage accounts at Schwab. There's going to be multiple accounts. For example, if there's multiple participants, like say a husband and wife that are both working in the same self-employed business, both participating in that solo 401k plan, or if you have multiple types of funds like pre-tax and Roth. So we'll prepare the requisite number of accounts based on what you want to do. We'll prepare the paperwork to open the requisite number of accounts. Again, we'll send you an email where you can access the pre-filled documents on the secure portal. You download, you sign, you upload. We would then review and compile and fax the paperwork to Schwab's back office, and then they'll send you an email when the accounts are opened up. Once the accounts are opened up, you can start making contributions. And we field questions every day from our customers, educating them on the contribution limits based on their scenario, the contribution deadlines, all the mechanics. In addition to making contributions, you can roll over money from a former employer plan or a non-Roth IRA to the solo 401k. And as part of that onboarding process, we ask you if you want to do a rollover. You could do it as part of the onboarding process, or you could do it later. And we've helped thousands of customers roll over funds from hundreds of different places. As you might imagine, the process will vary based on where the funds are coming from, but we've tracked all that experience as part of our knowledge base to make it easy for you, so that when you're ready to transfer funds, virtually in every case, we've previously helped someone transfer from the same place, so we can leverage that experience to make it easy for you. So you can fund it by rolling money over, by making contributions. And if you've established a plan, you signed up with us by December 31st, you have time to open up those accounts and make those contributions all the way up until your tax return deadline, including any timely filed extension in 2026. So what do you have to do by December 31st, 2025? You just have to establish the plan. How do you establish a plan? It's the documents, right? Because it's a legal entity. So really, it's just a matter of signing up on our website by December 31st because we prepare the documents within the same business day. Do I have to open the bank or brokerage account by December 31st? No, you don't. All you need to do, that's not a prerequisite to establishing the plan. And per IRS publication 560, which is the landmark guidance for self-employed individuals like sole proprietors for those self-employed retirement plans, there's a chart on page 3 of that IRS publication 560, that makes crystal clear that as long as the plan is established by the end of the year, that preserves the right to make all types of contributions, whether employee, employer, even voluntary after tax, by the business tax return deadline, including any timely filed extension. So you can take your time to determine how much you want to contribute, take your time to open up the accounts and actually deposit those funds. Do I have to obtain an employer identification number by the end of the year? So yes, an EIN number will need to be obtained. That's the IRS expectation. That's the way that we've always done it. And it does make sense, right? Because there may be tax reporting done with respect to these accounts. Let's say you open up a bank account that's an interest bearing account. That means the bank is going to report that interest income to the IRS based on the tax identification number that was used to open up the account. So if that account is opened up under the tax identification number that was obtained for the solo 401k, well, when we obtain that tax identification number, we are letting the IRS know that this EIN number is for a 401k. So that then subsequently, when the IRS receives the report of that interest income on that 1099 INT from the bank to report the interest income earned on your solo 401k bank account, the IRS will understand that that interest income was being earned inside of a 401k. So they're not going to look for it to be reported on your personal tax return or your business tax return, which of course you won't because it's growing on a tax deferred basis inside your solo 401k. So an EIN number will need to be obtained, but it only needs to be obtained as part of the account opening process, which again, that account opening process doesn't need to occur by the end of the year. That can occur next year. So once you're ready to open up accounts, you'll let us know, you'll give us back the completed and signed documents, then we'll go ahead and get the EIN number from the IRS and then guide you through the account opening process. Is the tax return deadline my personal tax return deadline or my self-employed business tax return deadline in 2026? Well, technically it is your self-employed business tax return deadline, but if you're a sole prop, that means your income is reported on your 1040. So your personal tax return deadline is your business tax return deadline. So it's April 15th, 2026 or October 15th, 2026 if you file a timely extension for that 1040. If I adopt the plan in December 2025, how can I make contributions based on income that I earned in January? Well, the industry best practice is for the plan to be effective as of January 1st, 2025, even if you adopt the plan in December 2025. As such, you're able to make contributions for any self-employment income earned and reported for 2025. My CPA tax advisor is informing me that the employee contribution must be made by December 31st, 2025. Are you sure that I can make this contribution in 2026? Yes, we are sure, and that's clear based on IRS publication 560, as long as the plan is established by the end of the year. And this is because the rules are different for solo 401k plans. It's actually a common point of confusion because for a full-time employer plan, such as one that you might have through a day job, those employee contributions do need to be made by the end of the year. And your CPA, your tax advisor, they may have experience with those types of plans, but the rules are different for self-employed individuals. Remember, your ability to contribute is based off of your self-employment income. which many self-employed individuals may not know exactly how much self-employment income they have until after the end of the year, right? They might have a seasonal business where they're doing a lot of work all the way up until the end of the year. So the rules give you time. As long as you set up the plan, now you can take your time to determine how much you can contribute, how much you want to contribute, and make those contributions by your business tax return deadline, including any timely filed extension. Can I make a Roth conversion for 2025 anytime up until my tax return deadline in 2026? That's a great question. Technically, a Roth conversion is not a contribution. A Roth conversion is where you have pre-tax money that's already in your plan, and now you want to move it to a Roth account. So that is going to be taxable. It's reportable. It's taxable for the year of the conversion, right? Because those funds are going from a pre-tax status to a Roth status. It's going to be taxable for the year during which the funds were actually transferred. So if you want that income to be taxable for 2025, it needs to be converted by the end of the year. It does need to be converted by December 31st, 2025. Now that's also going to be reportable. We handle the reporting as part of our service as an optional free service. So customers would just have to let us know about that pre-tax to Roth transfer by using a form on our website. Right after the transfer, they could submit it. Just submit it in a timely fashion, and then we'll add your plan to the queue to prepare the 1099-R, and we'll handle it as an optional free service. In other words, no additional charge. Okay, great. Thank you so much for checking out today's session. If you have any questions, please chat them over now. We do have a little bit more time. We also want to invite you to our community. We have the largest community of solopreneurs, solo 401k owners around this topic, other interested parties like advisors. It's totally free to join. All are welcome. You don't have to be a customer. You can join quickly and easily at mysolo401k.net/my community. So please don't hesitate to join. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking does tell the platform that the content is valuable, which will help other solopreneurs like you find it. So please like, whether you're on LinkedIn or YouTube or X or Instagram. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So please don't hesitate to subscribe as well. Well, looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable, and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.